adding rideshare to the Dow Transports, is that a meaningful addition? Does it change how investors and analysts and economists should look at this index?
Well, I think it makes the predictability of that model better, as Donald mentioned when we're posting the prior interview. But right now, we're really focused on the freight sector and what freight is going to tell us about the economy going forward.
Speaking of the freight sector, you actually downgraded your earnings estimates for pretty much the entire freight sector, for trucking and for rail. What led you to do that, and what are you seeing that would lead you to downgrade your estimates right now?
Yeah, so we really took estimates down for everything but the less than truckload sector. I think if you look at the expectations for demand for this year, it is very muted in the first half of the year, and everyone is sort of looking for that back half turnaround. And I should point out that's not only the public companies that have reported that, but when you look at the proprietary surveys that we put out in the rail sector and the trucking sector, the private companies are also looking for a back half turnaround. So I think everyone sort of pushed their expectations out a bit.
All right, so when we're looking at the freight market, I think the thing that really kind of reflects it in real time and most of it, I think trucking is about 75% of the market, are trucking rates. And I've been looking at the trucking rates. So the spot rates, they're down 8% year over year. The contract rates, contract really reflects what companies like a Walmart or a Target do. They contract a lot of their freight movement. That's down 11% year over year. What does that tell you about economic activity? What does that tell you about retail?
Well, first of all, contracts have been sort of catching up to an exceptionally soft spot market out there. I think you shouldn't read too much into that, because I think what we have on the truckload side of things is still an overcapacity. A lot of trucking companies started up and came into the market when we had the supply chain crisis, because rates were through the roof. These truckers built up what I would call a war chest, if you will, from those great freight rates, as well as money from the government. And it's just taken a little bit longer for the capacity to correct itself. I think as we move throughout the year, you're going to see that happen. I think spot rates are going to be much stronger, especially as we start getting in through the spring shipping season.